Hello and welcome. You're tuned into Market Cafe right here on ET Now. I'm Shrishti Sharma and with me is Kanishka Sarkar. And viewers, this is the show where in the next 1 hour we're going to be telling you all that matters for the market today, not just what the global handover is, but what are the cues for the Indian markets. We'll deep dive all into that. Let's get started. But Kanishka, before that, let's have a wrap up how the US markets performed yesterday.
Absolutely. In fact, it was a pullback. US equities did slip overnight with the S&P 500 that was about down 0.3%. Nasdaq Composite that was off about 0.1%, whereas the Dow Jones Industrial Average that fell about 200 points at 215 points to be precise, or just about 0.5%. This as rising Treasury yields, they continued to pressure the sentiment. Now, in terms of after-hours trading, we saw Nvidia gaining more than 2%, whereas this after a Truth Social post indicated that the company may be allowed to ship its H200 chips to approved customers in China, with a quarter of sales fee directed to the US government. Now, this update, remember, follows CEO Jensen Huang's meeting with US President Donald Trump and also signals progress after months of trade negotiations. But like I said, tech stocks led Monday's session, and it was only S&P 500 sector which managed to finish just about flat. The semiconductor names, they outperformed, with Broadcom up nearly 3%, and Nvidia and Microsoft, each of them added about 2% after a report that Microsoft is exploring custom chip development with Broadcom. Still, all three major indices finished lower, while the 10-year Treasury yield continued to climb, underscoring persistent inflation worries. Now, remember, this week's major catalyst is going to be the Federal Reserve final policy decision of the year. That's due Wednesday, that is tomorrow. So far, markets are widely expecting a quarter-point cut, with the futures pricing 89% probability. That's up sharply from the last month. Now, remember, investors will also heavily focus on Fed's updated economic projections and Chair Jerome Powell's tone, which could shape a market direction into the year-end. Now, remember, analysts are noting that Fed faces a complex backdrop this time around: sticky inflation, a murky macro environment, data delays from the recent government shutdown, and expectations of a new leadership next year. Now, beyond the Fed, markets will digest some key earnings from AI bellwethers like Oracle and Broadcom, as well as retail heavyweights like Costco. So yes, that's about the roundup. We did see a slightly negative day coming in for the US markets, but yes, so Srishti, that's how the markets fared. Tech stocks were actually the one which did hold up pretty well.
Oh, well, yes, absolutely. That's about the US market check. But with this, let's also tell you how the global markets in terms of commodities as well as the crude oil prices did pan out, and the crude oil prices, they were seen to be dropping to the monthly lows. Do remember that this particular week is going to be crucial for the crude oil prices as well, on the back of a crucial meeting that is lined up, and along with that, the peace talks that are going on. Implications of that could be likely on the crude oil prices. As of now, WTI crude falls over 2%, below that $59 per barrel mark, while Brent oil is hovering around that $62 per barrel mark. Now, the dollar is quite firm right now, but along with that, when it comes to the gold prices, they are holding up above that 4,200 per ounce mark. So let's watch out for that.
So that's about the commodity check, but let's get started and tell you some of the top global stories that we're tracking this morning. And first up, let's start with Nvidia. Just got the green light to ship its H200 AI chips to approved buyers in China, but only if Washington takes a 25% cut. President Trump says that Xi Jinping has responded positively, and the policy will soon extend to AMD and Intel as well. Commerce is finalizing the terms, and chip makers say that the deal balances competition with national security. Nvidia shares, they ticked higher as the semiconductor rivalry enters a new phase.
And China's trade surplus has crossed $1 trillion for the first time, powered not by America but by everywhere else. Now, November exports jumped nearly 6%, beating the expectations as manufacturers rerouted the shipments to Europe, Australia, and South Asia to dodge the US tariffs that now average 47.5%. Exports to the US fell 29% but soared elsewhere, lifting November's surplus to a 6-month high to $112 billion imports. Meanwhile, that remains sluggish, signaling weak domestic demand.
All right, let's get you some more on the Trump tariffs. Now, he is weighing fresh tariffs on Indian rice after American farmers accused New Delhi of dumping cheap grain into the US market. Now, a White House roundtable unveiling a $12 billion bailout for struggling farmers. Trump said that countries cheating on prices would face action and asked officials why India wasn't already being penalized. Now, farmers warned that subsidized imports from India, Thailand and China, they are depressing US prices, while Trump hinted that Canadian fertilizer could face duties next. Let's listen into his latest comments.
Tell me about India. Why is India not allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
Yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India.
Give me the countries if you could. Go ahead. India. Who else?
So India.
Mark it down. Which is good.
yes, sir.
India, Thailand, China into Puerto Rico, not into the continental U.S., but into Puerto Rico. Those are the main culprits.
So Puerto Rico used to do a lot of business.
All right, but hopes for a December rate cut that have strengthened after firmer consumer spending data, with markets pricing in 89% chance of a 25 basis points of move. Now, but the Fed heads into the meeting deeply divided. Analysts expect multiple dissents as tariff-driven inflation risks collide with signs of cooling labor market. Now, the Fed Watch tool points to a cut of 25 basis points, though Powell has warned nothing is guaranteed.
Then let's move on and talk about the world of entertainment. Now, Netflix $72 billion takeover of Warner Bros. Is facing some new turbulence. This after Trump warned that the merged group's market share could be a problem. And the comments triggered Wall Street price target cuts and added to bipartisan antitrust concerns already surrounding the deal. Meanwhile, rival bidder Paramount Skydance has escalated to a hostile offer, a move that complicated, by reports that Jared Kushner helped secure its financing, raising fresh ethical questions about political influence over the process. Sumita, my colleague, is here to break this down all for us.
Well, that's right. This action follows a weeks-long bidding war that saw Netflix, Paramount and Comcast competing for Warner Brothers' Discovery TV, film studio and streaming assets. And this definitely throws a wrench into the $72 billion deal with Netflix in a last-ditch effort to create a media powerhouse that would challenge the dominance of the streaming giant. Remember, Netflix had appeared to secure this $72 billion equity agreement for these businesses on Friday, and Paramount's all-cash offer is valued at $82.7 billion. This includes debt and carrying a $5.8 billion breakup fee payable to Netflix. This is expected to undergo significant antitrust scrutiny. Now, Paramount has submitted several proposals since September, seeking to compete with both established entertainment groups and major technology companies, but its bids had been consistently rejected. The current offer of $30 per share exceeds Netflix's nearly $28 per share bid, and Paramount, remains one of Hollywood's legacy studios, even though the company's box office performance has seen fluctuations, with the occasional franchise hit and prolonged periods trailing behind competitors like Disney. In fact, Netflix, like I stated, had contended that its deal with past antitrust scrutiny. It stands ready to refute Paramount's marketplace claims by pointing to different metrics. In fact, Nielsen's measurement of the industry shows that Netflix has at 8% of total TV usage time, which is slightly under Paramount's 8.2%.
All right, thank you so much, Sumita, for getting us all those details. But with this, let's also give you an update apart from the markets, wherein a powerful 7.6 magnitude of earthquake struck Japan's northeast, rattling a region that sits on one of the world's most active seismic zones. Now, authorities issued rapid alerts invoking lessons from the 2011 disaster that nearly killed 2,000 people and triggered the Fukushima meltdown. Now, Japan accounts for 1/5 of the world's major quakes, and the tremor has revived concerns of a possible megaquake as officials monitor the aftershocks and infrastructure impact.
All right, so that's the latest coming from Japan. But now let's tell you more about the India-US trade deal. Now, India and the United States, they're all set for a packed diplomatic and trade week with a 3-day talk expected to begin on Wednesday, that is tomorrow, as both of the sides are pushing to lock in a framework trade deal by the end of 2025. First up, let's listen into what Randeep Jaiswal, the spokesperson of MEA, had to say about this upcoming meeting.
The new Deputy U.S. Trade Representative, Ambassador Rick Schweitzer, he will be visiting India on 10th and 11th of December. This visit is a familiarization visit, as also to meet with senior officials in the Government of India. As you are aware, both governments remain engaged with a view to concluding a fair, balanced and mutually beneficial multi-sectoral bilateral trade agreement.
All right, but moving on, and Deputy USTR will lead the US delegation with an aim to stabilize the ties, expanding strategic cooperation and deepen tech and space partnerships. My colleague Sumita Karir is here with the key expectations from these talks. Sumita.
That's right. Sources suggest that India and the United States are holding 3-day talks trade this week. This is ahead of the agreement, and these talks are starting December 10th. This is not going to be a formal round of talks, but a familiarization visit. And essentially, that was the word from External Affairs Ministry spokesperson Randeep Jaiswal, who went on record and claimed so. Now, this US team will be led by Deputy USTR Rick Schweitzer, who will be meeting with India's Commerce Secretary Rajesh Agarwal, and both the sides remain hopeful of signing a framework deal by the end of 2025. In fact, as far as the deal is concerned, we've been earlier told by ministry officials that talks on multiple tranches is happening simultaneously, and the countries are focusing on arriving at a package deal which can address concerns of both the sides. And this package will address India's concerns of oil and reciprocal tariffs. That is near closure. The second part of the BTA, that is going to take some time. Eventually, it's only a matter of time before this decision is taken, and a political call now needs to be taken, is what India's Commerce Secretary Rajesh Agarwal stated a couple of days back. But there is another crucial visit that's lined up, well, that of U.S. Under Secretary of State for Political Affairs Alison Hooker, who is in the country. This is part of the United States' renewed efforts to stabilize ties with India. India, meanwhile, has also increased oil imports from the United States. We also signed a 10-year defense pact amidst tariff turmoil. Oil PSU companies also signed a 1-year agreement with the United States to import LPG. What really is on Hooker's agenda? Well, deepening economic and commercial ties, increasing American exports and collaboration in AI, space exploration as well. And she is expected to meet with leaders from India's space, energy and technology sectors. Remember, these visits are coming close on the heels of Russian President Vladimir Putin's India visit, wherein both the sides reaffirmed their ties and reaffirmed their commitment to expand their economic cooperation.
Right, thank you, Sumita, for that update. But let's move on. And the Ministry of External Affairs, that had advised Indian nationals to exercise due discretion while traveling to or transiting through China. Now, this comes 2 weeks after an Indian woman from Arunachal Pradesh was detained at the Shanghai airport. This after authorities refused to recognize her as with an Indian passport. Now, MEA has also warned China against selective targeting of Indian citizens. Let's take a look.
We expect the Chinese authorities to provide assurances that Indian citizens transiting through Chinese airports will not be selectively targeted, arbitrarily detained or harassed, and that regulations governing international air travel would be respected by the Chinese side. MEA would advise Indian nationals to exercise due discretion while traveling to China or while transiting through the country.
All right, so those are the latest comments coming from the Ministry of External Affairs on China. But with that, time now to slip into a very short break. We'll be right back with more news and updates on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Shrishti Sharma. And it's time now to take a look at how the Asia Pacific markets are faring this morning. And it's a rather down day coming in on the Asia Pacific front as well, tracking those Wall Street cues which were weak from the overnight session. If we talk about China's Shanghai index, 1/10 downtick coming in over there, 3,917 is where the index is at. Hong Kong's Hang Seng Index, that's also continuing to trade in the red today at about 0.5% lower. 25,650 is the level that it has managed to hold on, but still trading about 0.4% lower. Japan's Nikkei, that is also trading with marginal, marginally in the shade of red, 0.1% downtick over there as well. Nikkei is trading close to that 50,480 level. So yes, some key levels to watch out there. If you talk about Australia's ASX 200, that's also trading in the red, 0.2% downtick over there. 8600 is the level that the index has managed to hold on. So yes, that's how the indexes are looking. If you talk about South Korea's KOSPI, that's the one that's also trading in the red, 0.4% lower. 4100 is the level that the index has managed to hold. But if you talk about Nifty, we did close in the red yesterday, and on the downside we gave up 26,000 level. We ended just at 25,960, 40 points lower from that 26,000 level. So as a crucial level was broken yesterday and today as well, tracking all of those cues from the Wall Street as well as the Asian indices, all of them have been weak, and we are expecting a gap down start with cuts of more than 100 points as we speak. So yes, that's how the market is looking, Srishti. In fact, yesterday the Nifty snapped its 2-week streak.
Well, indeed, quite a fall that we have seen yesterday, not just in Nifty 50, but even Nifty Bank at one point in time was seen to be declining quite sharply and closed below that 59,300 mark for itself as well. And the major pain was actually in the broader market space, because Nifty Mid-Cap, that closed lower by 2%. Small Cap Index, that fell for the 5th straight session. And yes, of course, the pain and even the kind of a breadth of the market was very worrisome, especially the number of stocks that were seen to be hitting 52-week low for themselves was the key highlight for the market participants. That was something that was a bit of a cautious and creating panic as well. But talking about the sectors, Nifty Realty was the top sectoral loser. Nifty PSU Bank ended in the red. Nifty Energy fell for the 8th consecutive session, and even Pharma was not left behind. That was seen to be falling for the 2nd straight session. Even autos seem to be snapping its 2-session gaining streak. So all across the board, we have seen the sea of red, but Nifty IT, that was seen to be snapping its 3-day gaining streak, and even the metal index was seen to be losing, seen to be on the losing front. So all in all, not a great day for the markets. That was yesterday, and even today with the kind of handover, with the kind of the Asian peers that are seen to be trading right now, doesn't look like it's going to be a great start.
Right, doesn't look like it's going to be a great start for D Street today. But which are the stocks that could be on the move on the back of their news flow? Ashesha is here to take us through that list.
Well, yes, several stocks will be in focus, and first up, let's talk about some earnings candidate. Then Fujiyama Power Systems, that one reported, or rather got listed on the exchanges recently, and that one has reported very strong set of numbers for the 2nd quarter, where revenues have seen an uptick of a solid 73% on a year-on-year basis. In fact, profitability has nearly doubled over the corresponding period, and margins too have expanded to about 18% versus 15.2% that the company reported same time last year. So clearly, very strong set of numbers that Fujiyama Power Systems has reported. Shifting focus to GR Infra projects then, and the company has received completion certificate for a project. This is for construction of 8-lane access controlled expressway, which is a part of Vadodara-Mumbai Expressway. And the total bid project cost stands at about 2,750 odd crores, for which they have now received completion certificate. Dredging Corporation of India, on the back of a block deal that took place yesterday, an Invesco Mutual Fund Infrastructure Fund has acquired nearly 2.5 lakh shares at the rate of about 942.8 rupees per share. So on the back of Invesco buying stake in this company, keep an eye out on Dredging Corp as well. L&T, meanwhile, on the back of some internal transaction where the board of directors have approved scheme of arrangement to transfer their realty business into their wholly owned subsidiary L&T Realty Property Limited. So keep an eye out on this. Of course, this is largely an internal transaction, and we don't expect the stock to react to this. Bajaj Finserv, on the back of premium data for the month of November, where for the life insurance business, total premium collected stands at about 1,086 odd crores, and for the general insurance business, it stands at about 4,000 odd crores. So Bajaj Finserv also in focus on the back of insurance premium data that it has released for the month of November.
All right, thank you so much, Ashisha, for getting us that list. But that's not it. There are some of the other counters as well that we will be watching out for. Let me take it across to Rabinder for the list. Rabinder.
Well, as interglobal aviation can be in focus, where rating agency Moody's has flagged disruption as a credit negative for the Indigo, and they say that the fundamental of Indigo Baa3 rating remain intact, and they have downgraded Indigo to issuer category score for human capital to 4 as compared to 3. Welspun Corp can be in focus, where companies associate has rupees 1,165 crore from Saudi Water Authority steel pipe order, and the duration of the contract is 6 months, and the financial impact of the contract will be reflected in the Q4 FY26 and Q1 FY27. ICICI Bank, another stock, can be in focus, where company has executed the share purchase agreement with the Prudential Corporation Holding Limited to buy a 2% stake in ICICI Prudential AMC, and the deal value is rupees 2,140 crore. Physics Wala, another stock, can be in focus on the back of the quarterly earnings, where company reported a strong set of number in the quarter in Q2 FY26, and company's revenue was up by 24% on a quarter-on-quarter basis, and company has turned net profit as compared to a loss in last quarter. And apart from this, company has made a several investment where companies enter into share acquisition terms agreement with Utkarsh Classes and EduTech for the rupees 26.5 crore, and board has also approved for investment in the 4 different subsidiaries of approximately 500 crore. And lastly, Siemens Limited can be in focus, where board has approved rupees 2,200 crore slump sale of low voltage motor business to Innomatics India. So back of this, Siemens Limited can be in focus.
All right then, lots of stocks to watch out for. We'll see how they react. But let's also now talk about some of the cues that we need to be watching out for. We do not have many cues today, but the ones that we have are going to be very important. Firstly, back home in India, it's the weekly Nifty expiry. So we'll watch out for how the week ends. For the Nifty, for now, we are expecting a start in the negative territory, about 100 points of downtick over there. Now, in terms of global cues, in the US, we'll be expecting the Dole's job openings data. So yes, very crucial data coming out of the US. And also the 2-day FOMC meeting begins today. So it's a very important meeting. We are waiting for the Fed Reserve's rate cut decision, which is going to last for this year, and so far the market is pricing in about 89% chance of another 25 basis points of rate cut. So let's watch out for whether or not that happens over the next 2-day meeting. Now, in terms of some of the other events across the globe, Bank of Japan's governor Kazuo Ueda is going to speak later in the day, so we'll watch out for the commentary that comes out of there. And back home, yet again, we have the Telangana Rising Global Summit 2025. So let's watch out for what happens at the summit and the cues that we will be tracking from there.
All right, so lots to watch out for when it comes to the market important cues. But for this, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. The time now to talk about one of the most beaten stocks that have been there in the past few days, and that's Indigo. Yesterday itself, it slipped more than 8%. Now, it's been 7 days since the widespread flight disruptions, and Indigo is still grappling to restore normalcy. On Monday itself, Indigo had cancelled about 562 flights from 6 metro airports, 150 cancellations stemming from Bangalore airport alone. Now, amid all of this chaos, Moody's has warned of financial setback to the airline. Now, in the note, Moody's said that the disruptions are credit negative because Indigo could face significant financial damage from loss of revenue because of flight cancellations, refunds and other compensations to affected customers. That's along with potential penalties also that would be imposed by the DGCA. Now, remember, in a recent development, sources did indicate to ET Now that Indigo management has responded to DGCA notice. The CEO and COO, they've both submitted a response which will now be examined by the Aviation Ministry. Now, Aviation Minister has also said that India has the capacity for 5 major airlines. Let's listen into an excerpt of what he said yesterday.
There have been a lot of internal complications. This is a day-to-day operations thing that the Indigo should have maintained. Indigo was supposed to manage the crew, was supposed to manage the roster through its day-to-day operations. We are there to check if the FDTL is properly implemented or not, and there has been no compromise on that side. And for one thorough full month, we have been observing. On 1st of December, we had a meeting with Indigo on FDTL itself. When they required some clarifications, we have given the clarifications also with that idea, and they have not flagged this issue. So everything was running normal till then. Suddenly, we have observed this on 3rd. Immediately, once this was observed, the ministry came into the picture. We have taken over the situation at the airports. We have consulted all the stakeholders, and then you have seen how things have unfolded for those 2 days. Definitely, there was a lot of difficulty that has faced by the passengers. And as a closing statement also, let me tell you that we are not taking this situation easily. We are doing an inquiry, and we will take very, very strict action, not only for this situation, but also as an example. We will set an example for all the airlines. If there is any miscompliance, any non-compliance or non-adherence for any single person, any entity or any organization or any operator functioning in this civil aviation, we will take very, very strict action so that we set an example in the industry.
All right, but the credit rating global agency Moody's has called Indigo's flight disruptions as credit negative and also warned of impact on the airline major's revenue. Let me take it across to my colleague Rabinder, who is here with more details. Rabinder.
Well, as Interglobe Aviation is under pressure from the past few sessions on the back of the operational disruption, and after that stock saw a sharp decline, and in past 7 days stock saw a decline of approximately 13 to 14%, and after that many brokerages has cut the target price, and now Moody's has come out with a note where they have highlighted certain things where they say that the Indigo get temporary exemption from the new pilot duty with times rules framed by the DGCA, and flight cancellation refund and penalties will pose a financial risk for the airline. And they highlighted that the disruption are credit negative because Indigo could face a significant financial damage from the loss of revenue because of the flight cancellation, refunds and other compensation to affect consumer, along with the potential penalties imposed by the DGCA. And rating agency also said that Indigo could lose further revenue and suffer image damage after the hundreds of flights were delayed or cancelled, and when new pilot duty rules came into force during the busy winter travel period. And the agency also highlighted that recent flight disruption underscores significant lapse in the planning, oversight and resource management by Indigo. And Moody's had lowered the Indigo's human capital score to 4 as compared 3, saying slow hiring affected operation. And Moody's also added that the Indigo long-term fundamentals remain strong, including its leading market share, healthy demand for air travel in India, and leverage projected to stay below 3.5 times. However, it expects profitability to weaken this FY26 and warns that the recent disruption may impact Indigo image in international markets.
All right, thanks, Rabinder, for that update. That's the Moody's report on Indigo. But remember, the airline has also submitted a response to DGCA's show cause notice. And remember that DGCA had issued the notice to Indigo's CEO and COO on the 6th of December this month. And Sameer is here to take us through more details on this front.
Indigo management, specifically Indigo CEO and Chief Operating Officer, have responded to the show cause notice issued by DGCA. And its response, Indigo management has expressed apologies for the great inconvenience caused to the passenger. In addition, Indigo management has highlighted compounding factors that led to the massive flight disruption. Couple of them include the technical glitches, even the adverse weather conditions, the airport congestion, as well as the challenges which were there in implementing the phase 2 of the FDTL, the flight duty time limitation norms. These were a couple of factors that led to the massive flight disruption. In the response, Indigo management has also highlighted that once this fiasco, the massive flight disruption occurred, what were the steps that the airline took so as to attain some sort of normalcy or stabilizing the flight operation. They mentioned that Indigo management or the board immediately comes into action, and that led to the immediate steps led to the stabilizing of the flight operation. For example, on 5th of December, the Indigo operated roughly around 700 flights that scaled up to roughly around 1800 by 8th of December. They also mentioned that what were the steps taken to ensure the ticket cancellation was properly refunded, and also the luggage at the airport, it is to the respective customers. But as of now, DGCA, the aviation regulator, is examining the response given by the Indigo management, and the further action will be decided based on what sort of corrective actions or steps need to be taken. In addition to this, we are also getting to know from our sources that Indigo management has been summoned, has been called up by the inquiry committee that was set up recently, and this inquiry committee has been tasked to submit the inquiry report within 15 days that will highlight not just the exact cause of the massive flight disruption, will also suggest or come up with recommendations that what necessary steps should be taken so that these sort of disruption do not occur in future time.
All right, thank you, Samir, for that update. But let's move on and talk about the rupee, which is continuing to weaken. And as a result, the central bank has stepped in to allow dollar-rupee swap auction on December 16th. My colleague Anurag Joshi is here to take us through all of the details on this front.
The Reserve Bank of India is planning a US dollar INR swap to soothe volatility in the foreign exchange market that has seen the local currency touching all-time lows. The RBI will hold the US dollar India rupee swap auction on December 16, and the central bank will hold the swap for the USD INR buy sell for an amount of $5 billion for 36-month tenor. The market participants are to place the bids in terms of the premium they are willing to pay to the RBI for the swap tenor. And the step is seen to help boost the dollar liquidity in the local foreign currency market and also check volatility, which has seen the rupee touch a historic low of 90.42 on December 4. Subsequently, the rupee has recovered below the $90 mark, but it has seen a lot of volatility and pickup in volatility due to spates of buying of dollars by refiners and also selling in the equity market. Foreigners are net sellers of over $17 billion net so far in 2025, and that's the most in Asia. The Indian rupee is Asia's worst performing currency and has lost about 5% so far this year.
All right, but moving on to another story, the Tata Group and Intel Corp has announced a pivotal strategic alliance aimed at significantly boosting India's domestic semiconductor and compute ecosystem. Let me once again take it across to Anurag Joshi with more details.
Tata Group and Intel Corporation have announced a strategic alliance. The collaboration is focused on consumer and enterprise hardware enablement, semiconductor and system manufacturing. This will support India's domestic semiconductor ecosystem, both firms said in a statement today. As part of the Memorandum of Understanding, Intel and Tata intend to explore manufacturing and packaging of Intel products for the local markets. And this will be at the Tata Electronics upcoming Fab and OSAT facilities, as well as a collaboration for advanced packaging in India. OSAT is the outsourced semiconductor assembly and test facilities. This will be in addition to Tata and Intel intending to explore the opportunity to rapidly scale the tailored AI PC solutions. This collaboration would leverage the Intel's AI compute reference designs and Tata Electronics in industry-leading EMS capabilities and the broad access to the Indian market to various Tata Group companies.
All right, so that's all about the Tata Group and Intel alliance coming up next. But with that, time now to slip into a very short break. We'll be right back with more news and updates on the other side. Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. The time now to talk about Indigo once again. Now, the Indigo fiasco has triggered a widespread debate of monopoly or duopoly problem, with Indigo and Air India controlling over 90% of the market, resulting into consumer harm. But is it really a problem? Which are the other sectors moving towards duopoly in India? Ashesha is here with that entire breakup.
Well, yes, so the big question we are trying to answer today is that whether Indigo fiasco is a monopoly and a duopoly problem, and we'll try to put forth all those points that depict that perhaps this could be a duopoly problem. Now remember, Indigo has about 65% market share in Indian skies, and the new DGTR rules were applicable to all airlines. But problem got severe only with Indigo. In fact, at a time like this, when new stricter rules came into place with respect to roster norms, Air India and several other airlines like SpiceJet added new airlines. And remember, during the festive season 2, Indigo had added nearly 10% additional flights versus SpiceJet, which had to cut down on flights. So clearly, it is on account of the market share that Interglobe Aviation enjoys. Let's also talk about some sectors which were not duopoly earlier, but perhaps are moving in that direction in India. One, of course, is the telecom sector. Earlier we had a lot of other players in the market, but now perhaps we only have two major players, and Vodafone Idea being the third one. Cement, of course, consolidation is the name of the game in the cement industry, so that continues to remain at play, and most top 5 players continue to enjoy market share gains at the cost of other players being merged into those. We also have cinema. Earlier we had several other local players which were existing, but now there are only top 1 or 2 players within the cinema industry. Sectors which have always been monopoly, one of course is railways, and the second is coal mining, where Coal India has majority market share. As far as other new age sectors are concerned, which are now seeing effective duopoly, include the likes of search engine, e-commerce, food delivery, cab aggregators, digital payments, navigation, and insurance aggregators. So we have only seen a few players in these industry emerge, and most of the other players are either acquired or are not able to survive on account of large scale of these top 2 or 3 players. Meanwhile, other sectors where we are seeing a different kind of trend is where competition seems to be increasing. Something like a paints industry, where we have Grasim now entering the industry, because of which existing market share of top 2 players is now being threatened. We have defense manufacturing, which just does not have government players, but private players have also come in, and we also have space launch services which were earlier only provided by ISRO, but now we have several other private players as well. So yes, let's also talk about the 2 demerits which monopoly or duopoly faces. One, of course, pricing power is with the seller. We have limited choice. We as buyers have limited choice. These are the 2 main demerits of a monopoly and duopoly problem, and that clearly is playing out with Indigo as well, and the kind of problem that the industry was facing on account of the recent problem. Meanwhile, the government has taken cognizance of this. We had some important commentary that came in from Civil Aviation Minister Ram Mohan Naidu yesterday, where he said that we have the capacity to add many new airlines. We have the capacity to have 5 airlines, and we should perhaps get in some more airlines in the Indian aviation industry. So clearly the government is taking cognizance of the fact that this is a monopoly and duopoly problem that needs to be addressed in the time to come.
All right, thanks Ashisha for that. So that's about Indigo and some of the other sectors that are facing the duopoly problem. But let's put the spotlight on Siemens India, which is going to be in focus yet again. Now this, as its board has approved the sale of its low voltage motors and geared motors businesses to Innomotics India. This is at a value of about 2,200 crore rupees. Now remember, this is a cash-free, debt-free slump sale already approved by the board and is expected to close by June of 2026. Now remember, this business being sold mainly designs and sells low voltage AC motors, customized motor ranges, services and spares as well. It operates largely as a sales-driven unit, which is outsourced with outsourced manufacturing, which is a key reason why Siemens says that the business has low synergy with its core operations, and hence the slump sale is going to go through. Now, the buyer, Innomotics India, is a subsidiary of Innomotics GmbH, which itself was sold to sold globally to KPS Capital Partners in 2024. This particular deal has nothing to do with the promoters, however. Remember, the deal value that was derived. The deal value of 2,200 crores that was derived after negotiations, and also 2 independent valuation reports from Grant Thornton and KPMG. Now, this move to sell this unit is a very strategic one. Why? Because Siemens has been dependent on licensing and distribution agreements with Innomotics, and with the global transfer of IP to KPS, divestment became the logical next step, and hence the sale is likely to go through. Next up, the unit has also had a negative capital employed of 1.38 billion rupees So on the back of this latest announcement that has come, the company's CEO Sunil Mathur says that the sale ensures continuity for consumers as well as employees, while also allowing Siemens to focus on higher synergy, high growth segments. This business being sold isn't a major contributor. This is just for context. Now remember, it contributed around 967 crore rupees in revenue and 35 crore rupees operating profit in the 12 months to September of 2025. Why this is important to highlight is because this only contributes about 4.5% of Siemens India's FY24 revenue. So yes, that's the reason why this may not be a big deal for Siemens, but yes, definitely a thing to watch out for and see how the stock reacts.
All right, so all eyes on that. But before we wrap up, a quick look what the Asian markets are up to. So it's indeed not a great handover that we are getting, or rather the cues we are getting from the Asian markets. As of now, the Chinese market is trading in the red, while it's just Nikkei 225 that is trading with a bit of a green tick over there, while Shanghai is in the red, as well as even Hang Seng is seen to be declining almost 0.7%, and so is the implications coming in from GIFT Nifty as well, because just yesterday we have seen Nifty 50 breaking below that 26,000 mark as well, and Nifty is implying a gap down of almost 97 odd points. So let's see where the Indian markets head in today's trading session. But with this, we are completely timed out in this edition of Market Cafe. Goodbye from me and Kanishka and the entire team. Thank you so much for tuning in.